This video is designed to help you start a tax overage business. At the end of the video, you'll find a valuable gift. It's a tax overage business plan that you can download, and will lay down for you, step by step, everything you need to know to start a successful tax overage business of your own. If you are new to this channel, make sure to hit the subscribe button for more videos like this. Defaulted properties are auctioned to the public at live and online auctions. The starting bid at the auction in most instances is very low and very close to the delinquent back taxes. For example, a property may be assessed for as much as $400,000, keeping in mind it's slightly used and abused. At competitive auctions the starting bid may be as low as $30,000. If you do the math, there is considerable margin. Dreamers and late-night television viewers will hear it explained that these properties are sold for 10 cents on the dollar. That's not going to happen in the competitive marketplace. Bidders will pay more than 10 cents on the dollar. Experience has taught me, these properties will be sold for 25% to 50% of their value. So what are tax sale overages? An example of an overage. What are tax sale excess funds? For example, if you paid 30 cents on the dollar, and the property was valued at $400,000, you would need significant dollars, $120,000, maybe even $140,000. However, the back taxes were only $35,000 when the county tax collector auctioneer began the bidding. Let me repeat, if the property tax, which is delinquent, is $35,000, and the buyer pays $130,000, the county will accept $130,000 and a full 75% will be overages. In other words, the buyer has paid over the amount of taxes due. What happens to the $95,000? That money belongs to the property owner, who has probably abandoned and disappeared, not even realizing that the $95,000 is still sitting there at the county. At this point, the county or municipal government will go quiet or silent. Rarely does the county send out a search party, or attempt to locate the delinquent taxpayer regarding unclaimed tax overages. What happens to excess funds from a tax sale? The money will be held at a county or municipality, and ultimately as cheat, be confiscated by the county and state if the property owner fails to claim or demand the money. So can you make money with overages? Those who understand and know the county rules and the processes, learn very quickly how to take advantage of this situation. Certainly, others have figured out how to track down the defaulted property owner. They have figured out ways to become finders for this money, that will ultimately be lost by the desperate owner, as the money is cheats to the county and state by laws enacted by the legislature. It's rare for an investor or student to understand that the state and the county have many rules, but the savvy investor knows how to find tax overages and capitalize on them. When a tax-delinquent property is seized and sold at a tax sale, the bidding begins at around the amount of the back taxes owed. However, at competitive auctions, the bidding can go much higher than that. For example, if the bidding goes as high as $130,000, when the back taxes were only $35,000, what happens to the extra $95,000? That $95,000 is a tax sale overage, and belongs to the property owner who lost that property due to unpaid taxes. The owner may not know this, and if he or she doesn't claim that money, it will ultimately as cheat to the state, which has no incentive to go out of the way to locate the former property owner. Some people have made a business out of locating these owners, regarding their tax sale overages in exchange for a finder's fee. This is a little-known way to make money in the tax-defaulted real estate business. If you want to pursue this strategy, here's a step-by-step. 1. Verify that you can actually collect excess proceeds and check its accuracy with a third-party professional before you get started. 2. Get a delinquent tax list. There are a few ways to do this. 3. Send out a direct mail campaign, preferably a few months from the foreclosure date, when motivated sellers are most motivated to unload their property for next to nothing prices. 4. Send out offers for as low as possible, and buy as many as you can, preferably ones that are actually desirable. Important, you should not pay off the delinquent tax balance during your purchase process. You will most likely have to accept a quitclaim deed, rather than a warranty deed, for the property. 5. Play the waiting game until the property has been foreclosed by the county, and sold in the tax sale. 6. File a claim for the excess proceeds with the county treasurer, or tax collector. Follow the applicable process in your state. The next part of the video is not specific to the tax overage business. Nevertheless, this knowledge is essential for success in the tax overage business, as well as in any other business. Ignore it at your own peril. Operating a successful tax overage business will depend on the following 4 conventions. 1. A practical plan. with a solid foundation. 2. Dedication and willingness to sacrifice to reach your goal. 3. Technical skills. 4. Basic knowledge of management, finance, record keeping and market analysis. As a new owner, you will need to master these skills and techniques if your business is to be successful. Finding a niche. Small businesses range in size from a manufacturer, with many employees, and millions of dollars in equipment, to the lone window washer, with a bucket and a sponge. Obviously, the knowledge and skills, required for these two extremes, are far apart, but for success they have one thing in common. Each has found a business niche, and is filling it. The most critical problems you will face, in your early planning, will be to find your niche, and determine the feasibility of your idea. Get into the right business at the right time, is very good advice, but following that advice may be difficult. Many entrepreneurs plunge into a business venture, so blinded by the dream, that they fail to thoroughly evaluate its potential. Is your business idea feasible? Before you invest time, effort, and money, the following exercise will help you separate sound ideas from those bearing a high potential for failure. Identify and briefly describe the business you plan to start. Identify the product or service you plan to sell. Answering yes to any of the following 3 questions means you are on the right track. A negative answer to all of them means the road ahead could be rough. 1. Does your product or service satisfy an unfilled need? 2. Will your product or service serve an existing market in which demand exceeds supply? 3. Will your product or service be competitive based on its quality, selection, price, or location? Market analysis. For a small business to be successful, the owner must know the market. To learn the market, you must analyze it, a process that takes time and effort. You don't have to be a trained statistician to analyze the marketplace, nor does the analysis have to be costly. Analyzing the market is a way to gather facts about potential customers, and to determine the demand for your product or service. The more information you gather, the greater your chances of capturing a segment of the market. Know the market before investing your time and money in any business venture. The following questions will help you collect the information necessary to analyze your market, and determine if your product or service will sell. This brief exercise will give you a good idea of the kind of market planning you need to do. An answer of no to any of the questions indicates a weakness in your plan, so do your research until you can answer each question with a yes. 1. Do you know who your customers will be? 2. Do you understand their needs and desires? 3. Do you know where they live? 4. Will you be offering the kind of products or services that they will buy? 5. Will your prices be competitive in quality and value? 6. Will your promotional program be effective? 7. Do you understand how your business compares with your competitors? 8. Will your business be conveniently located for the people you plan to serve? 9. Will there be adequate parking facilities for the people you plan to serve? Planning your startup. The following questions are grouped according to function. They are designed to help you prepare for opening day. Merchandise. Have you decided what items you will sell or produce, or what services you will provide? Have you made a merchandise plan, based upon estimated sales, to determine the amount of inventory you will need to control purchases? Have you found reliable suppliers, who will assist you in the startup? Have you compared the prices, quality, and credit terms of suppliers? Business records. Are you prepared to maintain complete records of sales, income and expenses, accounts payable, and receivables? Have you determined how to handle payroll records, tax reports, and payments? Do you know what financial reports should be prepared, and how to prepare them? Finances. A large number of small businesses fail each year. There are a number of reasons for these failures, but one of the main reasons is insufficient funds. Too many entrepreneurs try to start and operate a business without sufficient capital, money. To avoid this dilemma, you can review your situation by analyzing the following 3 questions. 1. How much money do you have? 2. How much money will you need to start your business? 3. How much money will you need to stay in business? In order to answer the second question, how much money will you need to start your business? You need to prepare an estimate of all your startup costs. Here's a list of items you may need to take into account. Note that this list is for a retail business. Items will vary for service, construction, manufacturing or online firms. Decorating and remodeling, fixtures and equipment, installing fixtures and equipment, services and supplies, beginning inventory cost, legal, professional fees, licenses and permits, telephone utility deposits, insurance, signs, advertising for opening, unanticipated expenses. Now, the answer to the third question, how much money will you need to stay in business? Must be divided into two parts, immediate costs, and future costs. From the moment the door to your new business opens, a certain amount of income may come in. However, this income should not be projected in your operating expenses. You will need enough money available to cover costs for at least the first 3 months of operation. The following list will help you project your operating expenses on a monthly basis. Typical expenses for 1 month may include your living costs, employee wages, rent, advertising, supplies, utilities, insurance, taxes, maintenance, delivery, transportation, miscellaneous. Now sum up the total estimated monthly expenses and multiply it by 3. This is the amount of cash you will need to cover operating expenses for 3 months. Deposit this amount in a savings account before opening your business. Use it only for those purposes listed in the above list, because this money will ensure that you will be able to continue in business during the crucial early stages. By adding the total startup costs to the total expenses for 3 months, you can learn what the estimated costs will be to start and operate your business for 3 months. By subtracting the totals of the lists from the cash available, you can determine the amount of additional financing you may need, if any. Now you will need to estimate your operating expenses for the first year after startup. The first step in determining your annual expenses is to estimate your sales volume, month by month. Next, determine the cost of sales. You may want to use a spreadsheet to do this. After startup, the primary source of revenue in your business will be from sales, but your sales will vary from month to month because of seasonal patterns and other factors. It is important to determine if your monthly sales will produce enough income to pay each month's bills. An estimated cash flow projection will show if the monthly cash balance is going to be subject to such factors as the following: failure to recognize seasonal trends, excessive cash taken from the business for living expenses, too rapid expansion, and slow collection of accounts if credit is extended to customers. Conclusion: if you have carefully answered all the questions in this video, you have seriously thought about your goal. However, there may be some things you may feel you need to know more about. Owning and running a tax overage business is a continuous learning process. Research your idea, and do as much as you can, yourself, but don't hesitate to seek help from people who can tell you what you need to know. As we conclude this video, it's time you get your free Tax Overage business plan gift. Go to the description below this video to get it now. It is completely free, no strings attached. Thanks for watching. If you enjoyed this video, please like and hit the subscribe button for more videos like this.